What's up, everybody? My name is Raja Banks, and I'm the CEO of Dominion Markets and Market Fluidity University. So today, video is very important, and what we're going to talk about is we're going to talk about a few different things when it comes towards trading. We're going to start about what success looks like when you start to trade, FOMO, being afraid to trade, and being kind of like hesitant in taking entries. So first, I want to talk about what basic success looks like when you start to trade. Now, a lot of people may have different thinking when it comes towards what success really is when it comes to trading. But I think the basic fundamentals of success when it comes towards day trading is where your bills, your day-to-day bills, are paid. Whatever money you're making from the markets, you withdraw, let's say 40%, and that 40% pays for your internet bill or your phone bill or your rent, mortgage, car payment, insurance, whatever that is. I think that's the initial success. I also think that social media has really skewed the perspective of what success may look like. Maybe someone may say, okay, what success is having $1 million in the bank or having a few supercars or a big house and all this and this and that. That's all fine. That's fine. But in the beginning, I think success in trading should be something that it should replace your primary income, which is paying your day-to-day bills. That's it. That's all what it is. Because in the beginning, traders may focus on, say, okay, I want to make $1,000 a month, or I want to make $5,000 a month. And then what are you going to do? If you want to make 10K a month or 20K a month, what are you going to do next? What's going to happen after that? Do you have a roadmap of what you're going to do with the money? Why are you getting all this money? What's the purpose? A lot of people want to make a lot of money, but not a lot of people really know what that money is going to be used for. Is that going to be used to fund other ideas? Is that going to be used to pay your bills? Why do you need a certain amount? What I did in the beginning was my whole idea was that, okay, if I can make money from trading, I'm going to use trading as a cash flowing vehicle where I can use the money, put it in different businesses or start different, or to work on different ideas financially, so we started Dominion Markets. Of course, that was started based on the money I made from trading. Then another one, we consistently improved our education system with better quality production to make sure the deliverability is good. We started Magic Keys and all that stuff. So you need to have some sort of a roadmap of what you're going to do with the money. Now, once you really start to get successful, once you really start to get these successful trade ideas working in, there's this fear that comes in our mind, and this fear is very, very real. Let's say you're up. Okay, before we tap into that, I kind of want to touch base on what your goals should be when you start training. A lot of guys have this weekly goal, monthly goal, yearly goal. Some guys also have a daily goal there. Okay, I want to make certain amount a month, or I want to do certain percentage a week, a month, or a day. In the beginning, I would say do not focus on a weekly or a monthly goal. And I'll tell you why. When you start to focus on a weekly goal, let's say your weekly goal is going to be 5%. And someone's going to say, oh, 5% is too much, man. Trust me, with leverage, you can achieve 5%. Let's say your weekly goal is 5%. Or let's say your monthly goal is 5%. And let's say you're sitting at 4.6% for the month. Now, subconsciously, you're going to have this sort of pressure onto your performance that you need to hit this 5% goal. Or even if that goal is a weekly 5% goal, you're going to be sort of pressured to achieve that 5% goal in a week. And that's really going to hinder your progress because now you are pressured to succeed. And whenever you're pressured to succeed in making an emotional decision, the reason why I say emotional decision, because every trade that you take involves money, and every decision we make around money is an emotional decision. So when you're pressured to make an emotional decision, especially around money, that's where your judgment gets a little bit fuzzy a little bit, right? You can't really think things clearly, and that's where the problem happens. So to solve that issue, what I did in my way in the beginning was I was like, okay, I'm not going to focus on specific percentage. I'm just going to focus on to see, can I get a winning trade? Can I have a winning trade in a day? That's it. I only focused on that. Let's say if it's day one, I'm focusing on, can I get a winning trade? And then my next focus would be that, okay, if I can't get a winning trade, if I'm going to be losing a trade, can I manage my loss? Can I lose less than I plan on losing? And this concept is explained in great detail in Market Fluidity University. But anyway, next we move into like your winning trades now, right? You're winning trades and you're doing well, and then one day there's this fear comes in, like you've done well Monday, Tuesday, Wednesday, now it's a Thursday, and now you're getting scared of executing a trade because you don't want to lose your profits. That's very real, that's very real, unless you're Don Wu, who doesn't really gonna care about who's following who and how much money is there, blah, 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 blah. That's a whole nother story, right? But if you're getting scared in executing a trade, there are two things you can do. Number one thing is you can lower your lot size, because it's very normal, because this is maybe this is the first time you've seen a profitable Monday, a profitable Tuesday, a profitable Wednesday. Now it's Thursday, your setup is there, your confirmations are there, the candle confirmations are there as well, your risk is small, and you want to execute it, and you're like, man, it's too good to be true. What if I execute and I lose the trade and I lose some profits? That happens. I'm going to be very honest. That used to happen to me too. So what I used to do was, I'm like, okay, you know what? Here's what I'm going to do. I'm going to do one of two things. Number one is that if I'm getting fearful, now you got to understand where fear comes from. Fear comes from lack of confidence, and lack of confidence comes from not having enough education or not having enough knowledge. That's where it comes from, right? So when you're fearful, go with a smaller lot size. Go with a smaller lot size and just see what happens. Because, hey, listen, you've made your gains Monday, Tuesday, Wednesday. I don't know whatever gains there were. Or you've made your gains on Monday or Tuesday. Just go with a smaller lot size. Even if it's you had a winning trades on Monday and now you're in Tuesday, you're fearful. Just lower your lot size. Just lower the lot size. That's the one thing. The second thing what I would do is, the one thing is first, and then, or the second thing what I would do is, I would say, okay, you know what? I have won trades on Monday, Tuesday, Wednesday. This is a Thursday now. Maybe on Thursday, I'm going to execute with the same lot size, but I'm going to be extra careful with my risk. You got to make risk a game, because a lot of people say that they will have like a 15 or 20 pip stop loss, and they will let price hit stop loss. Let's say you're using a one lot on gold, you got a 20 pip stop, you're risking $200, and you're gonna let price hit that stop loss and lose $200. And my whole thing is that if I'm gonna go in drawdown, I'm gonna make sure that I lose less than planned. I'm gonna make sure that I lose way less than I would expect to lose. If I'm risking $200, I'm going to make sure I lose $150, $140, $130. These are some very important risk management techniques that we teach in Market Fluidity University, because the thing is, once you understand you have to keep your losses small, taking trades become easier, because now you know that, okay, I'm going to execute on this trade, and even if it's a losing trade, even if I'm scared, I know how to manage risk. I know how to lose less. So when you know how to lose less, and if you do lose that trade, and if you've had profits Monday, Tuesday, Wednesday, what you're doing is you're essentially risking less of those profits on a Thursday. Even if you're executing a trade on Tuesday after winning it on Monday, you're still using less percentage. You're losing less percentage from Monday. That's the most important thing. Whenever you're scared, just trust yourself that you know how to manage risk. It's a very, very, very important aspect towards trading, right? There's also some things that happen, like, when we see some moves happen and there's some sort of FOMO comes in, and whenever FOMO comes in, fear of missing out, you're just like, man. The worst thing is when you're waiting for a move and you go to the washroom, or you go listen to what your mom is saying, or you go listen to what your wife is saying, or your husband or your kid is saying, no matter what, you go for maybe 5 minutes. You come back and you see prices moved, and now you're like, oh man, I knew this is what's going to happen. I knew this was going to happen. Now I've missed the move, and now this FOMO comes in because you've been watching and waiting for this to happen, and then these feelings of FOMO comes in, and you're like, man, I should have been in this trade. I've taken these trades so many times in the past. I've watched this happen so many times, and this happened today, and I missed it. Now, the problem there is, I think FOMO comes in when you don't understand that the same move is going to happen next week, or it's going to happen next month, or it's going to happen over and over and over and over again. That's a realization we need, because whatever move that we see happening in the market, we really truly have to understand that this will keep on happening over and over and over and over again, because the market is just going to repeat itself, man. Like if you're having this fear of missing out, that's totally fine. Look at it this way, right? Look at it this way. Your friends go on a trip. Your friends go on a trip, or your friends go out to some restaurant or wherever they go there, but you're sick and you're like, man, you know what? I'm missing out on all this fun. They're posting pictures, they're posting stories, and you're like, shit, I should have been there. This is so much fun, blah, blah, blah. But then you tell yourself, or whoever's there with you, they tell you, hey, man, listen, that's fine. It's fine. We'll get it next time. We'll go there next time. Or we're going to be present and available next time that happens. Trading is the same thing. When you see price move and you're getting fearful, it's the same concept. It's the same idea. You gotta have real trust in the markets that, okay, if I'm missing this move, it's gonna happen over and over and over and over again. Let me tell you something about gold, right? So now, when I started gold, now whoever starts trading gold, you do know that gold has some wild moves. You know, gold moves super wild. And whenever gold has these wild moves that they happen, you know, it's very hard not to have these feelings of FOMO, you know. But then I came to grips with myself that, okay, if gold will keep on having these wild moves, these moves will happen again. Next week, next month. And I can guarantee you that one big move you missed on gold, let's say last month in August, that same move, whether it's bullish or bearish, is going to happen again this month. That's the kind of confidence you need to have in the markets. You know, and it's totally fine. Because listen, here's the thing. Whenever you have FOMO, this tells me that you're trying to rush the process. Why are you trying to rush the process? You cannot simply rush the process. Rushing the process is not going to get you anywhere. You know this, man. You know this. Like if you're someone who runs a business, if you know someone who's who's training athletes, or is training, whatever, or if you're a teacher or you're a professor or you're working in some sort of environment where your production is based on the work you put in, you understand that rushing the process is not going to get you anywhere. So there's also, so let me go through this one comment over here that I had, and I just want to touch on some things which are also very important. It's mostly about handling losses as well, because handling losses, it's like being okay with somebody when you are young and they try to bully you, or they try to not give you enough respect that you think you deserve, and you have these feelings of resentment to them. It's kind of like the same thing, because when you're in the markets and you take a trade and it's a losing trade, it's very difficult to cope with that loss, because let's say you've been waiting 2 hours for a move to happen, right? You've been waiting 2 hours for the move to happen, and that move comes up, the candle confirmation is there, it's set up perfectly, your stop loss is great, your targets are amazing, there's clean traffic to the left-hand side, we're creating support, you want to take a buy, it's the perfect impulse entry, or it's the perfect market structure form, and you take a trade, and price moves up, now you're getting excited, and then price comes down to your entry point. As it comes to your entry point, it starts to go lower than your entry point if you had a buy. It starts to go lower. Now that profit becomes a red negative, and that negative increases, moves slowly, it inches towards your stop loss, and it hits your stop loss. Once it hits your stop loss, then you're like, oh man, how am I going to recover from this? Or how am I going to deal with this issue? It's very simple. It's very simple. Now, let me ask this, guys, right? Let me ask this. Whenever price is moving toward a stop loss, right? Our intuition and our gut feeling is so profound, it's so good that we know price is going to hit our stop loss. Instinctively, we know it's going to hit our stop. So if we know it's going to hit our stop loss, why not close 50%? Why not understand how to manage risk and close 50%? Never ever let price hit your full stop loss. That's something that I do. And I'm very comfortable with my losses. I'm so comfortable with my losses. Like, let's say, so my account is at like over $500,000, right? If I'm trading for the day, I'm starting my trading day knowing that I can lose $5,000 to $7,000. I know that instinctively, that if I execute this one trade, I'm risking 5,000 to 7,000. And if I lose 5,000 to 7,000, I'm going to say, okay, you know what? That didn't come as a surprise because I was expecting to lose $5,000 to $7,000. The reason why people have a big issue in dealing with losses is because you're not prepared to lose that amount. If you're prepared to lose that amount, you're not going to have any problem with losses. It goes with everything in life, business, work, job, commission, sales, whatever. You have to be okay with losing your trades. Because here's one thing, whenever I take a trade and I 100%, all the time, I know that I'm going to lose the trade. Because if I do lose the trade, I'm like, okay, you know what? Same thing. It wasn't a surprise. But at the same time, I respect myself as a trader enough knowing that I can manage my risk. If I'm entering a trade knowing that I'm willing to lose $5,000 to $7,000, I'm going to make sure I lose less than $5,000 to $7,000. If I can lose less than $5,000 to $7,000, then maybe that next day when I'm going to have a profitable trade, I'm going to make $5,000 to $7,000. Like 1 to 1.5%. I'm going to make that amount. And if I make that amount, let's say if I made, let's say like 6,500, right? If I made 6,500 the next day, but today I lost, let's say 4,000, I'm up in profits by 2,500. Now I'm not at break even anymore. Like a lot of traders, you don't want to manage your risk. You don't want to manage your loss. You don't want to close 50%, 25%. You don't want to do that. If you don't do that, you're going to lose 15 pips here, and then you're going to make 15 pips there. You're going to be at break even. But if you manage risk, if you're managing your loss, if you're losing, let's say 10 pips, 11 pips, and you're making 15 pips or 20 pips, now overall, you're profitable. Overall, your profits are bigger. That's one thing you need to identify. Are you really doing that? So that's really important when it comes towards managing your risk, managing your loss, and really truly accepting that loss. You have to accept that loss, and you have to tell yourself, okay, you know what? If I'm accepting this loss, I do not have to be in a rush. I do not need FOMO because this little itty. Okay, by the way, if your account is less than $500, you need to stop trading. Withdraw that amount, buy your mom some flowers, take a girl on a date, go get some food, groceries, shit like that, do that. If it's over $500, you're still at the borderline of should you even consider trading or not. If your account is over $1,000, perfect. That works perfect. But anyway, managing your loss every time. Understand how you're going to manage your loss. That's the most important thing. We see it in our clients every day. Every day. We have very successful clients, and the most successful clients, what they do is they manage their loss. They manage risk. They make sure that they always lose less than what they plan on losing. Right? So take my advices as a grain of salt. They're not like I wouldn't say they're the best advices, but these are advices that worked for me. I'm not going to say it's wildly successful, but I've been moderately successful in trading where I was able to withdraw certain amounts to start businesses and really scale my income. So that's where I come in. My advices, they worked for me the best, and if they work for you, amazing. I wish you all I wish you all success. I wish you all that you do have patience with your losses, and you have, I don't know what I'm going to say. I don't want to do the video again. But anyway, take care, guys. Have fun. Be safe. Out. Hope it recorded the whole thing. I'm going to be so pissed off.